Oh my God. Son of a bitch. 18 minutes. Wow. Oh, motherfucker. I wish I would have looked over sooner. It might just be a sign from the gods. Jesus. All right. I guess I'll give you guys the short version. That's my bad. I don't know why the mic was muted, but obviously, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Thank you for letting me know. Sorry about that. What's up, Kezolino? Lazy boy, good to see you. Triple dumps in the house. Looks like interesting spreadsheet for sure, man. Yeah. You can always message me on Discord but it's all good. All right, so yeah, I guess we'll pull that back up and just do that one more time. So I'm gonna give you the short version of it. Okay, I'm not going through the whole thing again, unfortunately. Basically, what it comes down to is the FOMC meeting. We just got the 50 basis point rate hike, and now that was the main data point. It was already priced in. We got what we expected. So now we're looking at what new data point do we get, and obviously we have a bunch of projections. We have what they expected in September versus what we really have now. Um, the most important of those, obviously, is these two columns right here, and that is basically the Fed funds rate, 4.4% now, obviously after the hike. The September projection was that it was going to be 4.4%. So right in line with projections. So it's no more bearish, it's no more bullish, it's 100% just what the market expected. So that's nothing. So the market can just go about its business now and do whatever it wanted to do, knowing that exactly what it expected happened. But the second number here is what really matters, and that is essentially the 2023 number. It was in September projected to be 4.6, and now it's 5.1. So that's a massive difference. Obviously, if they were expecting it to be 4.6 before, and now they're expecting it to be 5.1, the central tendency was 4.4 to 4.9, and now it's 5.1 to 5.4. So the increase from 4.6 to 5.1 is essentially, a 10%, more than 10% increase. So however bad things were this year, however bad people thought they were going to be going into the future, if they were counting on another 25 basis points or 50 basis points, go ahead and just up that by 10% more for the whole year. So essentially the difference between the 4.4 and 4.6 versus the 4.4 and the 5.1. So if the market was basically pricing in, I should say not even the market, the Federal Reserve people that matter, okay, the voters, were pricing in less than one more 25 basis point hike. Less than one more 25 basis point hike is what was being priced in by them. And now what's being priced in is, essentially the difference between the 4.4 and 4.6, essentially that 25 basis point hike plus another two 25 basis point hikes or 150 or whatever. So we went from pricing in one 25 basis point hike in 2023 and then, the pause, the pivot, the cut, the zero. That's what the market thinks is going to happen. We went from that to now actually 75 basis points, next year. And then the pause, the pivot, the blah, 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 blah. So very, very important. You guys can find all this data if you want going into the future. It is worth paying attention to GDP. I did make a little note up here in the first muted version where essentially what I was saying is the real GDP in the first 2 quarters was negative. And that's why everybody was saying, oh, we're going into a recession, we're in a recession, whatever. But the unemployment rate was not low. There was too much, basically like manipulation. The Fed had its hand on all the scales, so you can't trust, the weight of anything. So that being said, the big difference was in Q3, regardless of politics, put all that aside, whether you think it's right or wrong, they should have done it, they shouldn't have done it, they'd used it to buy boats, they did it to help our allies, whatever. But the massive reason that GDP did not go negative in the third quarter, the main reason, and the only reason it's still projected to be positive for the year 2022 in the United States, is because of emptying the strategic petroleum reserves. Instead of like making new products and then selling them, which is what you normally do, for GDP, we essentially have a backlog, some storage, some stock, and that's, the strategic petroleum reserve. And again, without getting political, when we should, when we shouldn't use them, who we should help with them, should we send stuff to China to get it, processed because we can't do it here, or should we only send it to our allies? All that stuff aside, regardless, the only reason GDP is even potentially going to be positive for the year right now is because we're selling all that extra oil. And not only are we selling it, it's not even just oil actually. It's the oil, it's the natural gas, liquefied natural gas that we're sending to Europe. It's all, energy based or weapons based at this point in time. We're basically selling people high technology weapons of war and energy. And then of course the energy is at ridiculously high prices and we're selling a ridiculously large amount of it. So those two things together make the deficit between trade of us importing and exporting in the United States massively different. Everybody thinks that the United States just imports all this stuff and we just buy everybody else's goods and we don't actually export anything. We don't have any exports. It's just all us just consuming everybody else's shit. But in actuality, if you look at the numbers, which I have a slide prepared. No, I'm just kidding. I don't prepare, obviously. I can't even unmute the mic, guys. Come on. What do you want from me? So essentially what it comes down to is we actually have massive amounts of exports, more than like 99% of the other countries on planet Earth, like by dollar amounts. But because we also export a shitload of stuff as well, we still run a deficit. So with the energy difference which took place, and then on top of that, us buying a lot less shit because, obviously inflation, so people have less disposable income, so they buy less stuff. On top of us exporting a ton of extra energy and, weapons, depending which ones are counted and not, that makes our GDP look positive. So there's still potential that 2022 could be positive and technically, no recession, whatever, blah, blah, blah. But, pricing in 0.5% in 2023 and then 1.6% by 2024, 1.8 by 2025. Like, are you shitting me? Anyway, so regardless, the only way this happens is if there continues to be just a massive, ridiculous energy crisis and the war just goes on for years and years. So, yeah, maybe it could. But anyway, we see obviously that the difference then even, the change in real GDP, they were expecting was 0.5. September, it was 0.5, or they're expecting by end of year to be 0.5. The projection was 0.2. So it's substantially higher than what they expected. Obviously, they didn't price in all of the extra exports via energy at ridiculous prices. But going into the future, 2023, they're expecting 1.2, and in all actuality now 0.5. So are delusional? I don't know. Regardless, you can look at all this stuff, take a look at it. Obviously the jump from 3.7 unemployment rate to 4.6 went down from 3.8 to 4.4. So you can look at all that stuff. Obviously, yeah, that's enough of that. All right, so in line with what we saw with the Fed meeting, obviously, because it was essentially just expectations. So we saw, you would think, obviously, that when the hike happens, we go up 50 basis points. It's already priced in. But typically in between when, Europe or other important countries hike rates and we hike rates, we see weakness in the DXY and also in the TNX. But now we're continuing to see weakness even as, the Fed is staying and getting more tight than most other countries. A lot of countries are already trying to pivot right now. U.S. is not there. And that's eventually going to manifest in the markets via, yields and DXY strength. So we see the hard buy signal. We left the bearish control zone on the daily. We're still selling off. We're still at the lows. We haven't quite made it down to the 200, which is our target. But we're at a key support right here, which was that previous top. So we're at the 382. We're at the previous top. There's still potential for a leg down to the 0.5 of the 618. But we just saw essentially, what the rate is, essentially 4.4%. And the 10-year treasury is still pricing in 3.5%. So obviously we know the yield curve is inverted and all that good stuff. We know what it means. Essentially, well, and maybe you don't know what it means. What it essentially means when the yield curve is inverted, the short end is not lining up with the long end. It's telling us, hey, normally you would get paid more money, more yield over a long period of time to account for the extra risk of changing, conditions going into the future. So a 2-year treasury is typically going to pay more per year than a 3-month, which is going to pay more per year than, the 10-year or something like that. But when there's uncertainty going into the future, especially in periods of like, economic uncertainty, spikes in inflation, etc., the market is slow to adjust. The bond market is slow to adjust. They don't want to start locking people in for 10 years or 30 years at like 5% rates when we just spike up there for like a heartbeat and then it rolls back over. So what is happening is essentially the bond market, or the players in the bond market, are basically saying, hey, we don't believe that there's going to be this much inflation, and we don't believe these rates are going to stay this high going into the future. So sure, go ahead, enjoy your, high rates right now on short-term shit, but we're not locking people in at 5%, 7%, 10% going into the future. Now, will that change eventually? I mean, maybe. Everybody else was saying, 3% was the top on yields before, and obviously I was calling for 5%. And now here we are at, we made it up to 4.3. Fed fund rate is at 4.4 right now. So starts not sounding so crazy that we're going to be at 5%. Matter of fact, 17 out of 19 of the people that matter on planet Earth agree with me that we're going to 5%, which was insanity not that long ago. But again, that was a technical breakout of the previous level at 3.5 and then the back test of the 5 point, whatever it is, 3. So U.S. oil on the daily, so sold off pretty heavy, broke down from key support, back tested that support, bear market confirmed. No bullish divergence or anything like that on the TDMACD, but we do see a little bit of bullish divergence on the Jewel Thief. So potentially we could get a burst back up here, back test the 200s. Seems possible. We'll have to see, obviously. Reclaiming the bottom of this channel is definitely a big deal. I don't really trust much of the moves that we see over like the next couple days and have seen over the last couple of days, just until we kind of see them flush out. I would love to see us like test back up and test back down on stuff and get a real accurate, idea as to where things are really at, because we really don't know until we test them. So we saw the VIX move played out perfectly, almost came down to the area we were defining as our, stop loss, and then we bounced the previous low, we bounced the ascending support, we came up, back tested the 200s exactly on that gap up, 25% move on the VIX happened in just a couple of days, and then immediately just sold back off. So again, exactly what we said happened. We were talking about the difference between people are protecting themselves to the downside potentially with options, but they're not doing it where it's being displayed in the VIX. And essentially the reason is because they're buying short-term options, and we have big options duration expiring on Friday as well. So very important. Dow Jones, obviously, back test that previous level, got a wick slightly higher. Looks like a pretty clear rejection over the last couple of days, in my opinion. We do see the stochastics powerfully angled to the downside. We see red slope line below we see the red histogram below the blue slope line. Try to push back up to back test it, got a little rejection. One of two things going to happen right here. We're either going to hold this level or come back and back test the 200s and then hold that level. And then this is going to look like a bullish reset and we'll be at new all-time highs before we know it. Or, we're in the process of getting rejection, this ready to sell off. The truth is, though, what we're looking for is a back test of that 32,500. If we come down to 32,500 and that level holds, we likely go higher, and we're in a bull market. We back test the 200s, we confirm, we go higher. Dow Jones looks good. That doesn't mean the other indices have to do the same, but likely will. Some are going to underperform, some are going to overperform, but so here we see on the SPY, obviously we have this descending broadening wedge. We've tested the top of the range a bunch of times. That's exactly what we did here. We tested the top of the range. We gapped up here the other day, put in a new high, squeezed everybody out of their shorts, and then came back down and lost the 200 exponential and simple, lost the resistance, we're at like the 236 right now. 821 bull cross is in effect. This is it. All the resistance is right here. So regardless of what you think is going to happen, okay, whether you're right or wrong, in my opinion right now, could go either way. If you're like, hey, do you think we go up from here or down from here? My answer, honestly, is yes. Yeah, I do. Hell yeah, you're right. If we break out to upside, we're probably going to retest the previous all-time highs. If we break, down, we're probably going to retest the bottom of the channel. So, which way is it going to happen? I mean, we honestly don't know. We really don't know. We're at resistance. Every other time we tested the resistance, we got rejected. The 200s been acting as strong resistance. We came down, lost, key fibs, back tested, put in a series of lower highs and lower lows, came down to the 382, back tested the 236. So, most likely, we're at resistance. It would make sense to go lower from here. Now, if we consolidate here, maybe we start confirming into a bull market and things start looking good again. Not taking into account any fundamentals or anything like that. Triple Qs are next. We looked at this W double bottom. Talked about the measure move. The back test is 200 exponential and simple. We got to push up, melted back down, held support, kind of. And then we got a gap up to a new high, came straight back down, held support, kind of. Getting above, obviously 302 is key. Getting the measure move up here to 315 looks good too. After that, though, what happens? Do we just put in another lower high and then go down to another lower low? I mean, probably. Until we flip into a bull market, I'm not bullish. So right now, the Dow Jones looks pretty good. We'll see what happens. Everything else looks like trash pretty much. IWM, Russell, same thing. We double bottom right here, which is nice. We back tested the 200s, but we need to get back above the 200 exponential and simple. And we're just not doing that right now. Matter of fact, the 821 has flipped bearish. We see obviously bearish divergence is playing out in real time right here. The truth is, though, a lot of these daily charts, it looks like the indicator oscillators are coming down substantially faster than the price action. So, the same way we had a little bearish divergence short term, there's potential that we could start printing bullish divergence and start getting these technical breakouts to the upside, through some of these key levels. So I don't want to be overly bullish right now, obviously, because, it's not really warranted, but I also don't want to be overly bearish. As we're starting to see signs that, hey, we could actually be flipping back into a bull market, regardless of what you think's happening or whatever. If there's more buyers than sellers, regardless of what your agenda is or, what your opinion is, markets go up. It's that easy. So XLE obviously sold off pretty aggressively, started really looking like a double top at key support right here. We talked about that back testing. Still looks like we're coming down to 200. It's like $80. So we saw obviously the inflation ticking over here. We don't need to talk about that right now. The yield curve inversion, we did a little breakdown on this. Very important. Pay attention that right now the 2-year yield is up at 4.2%, which is under the Fed funds rate. And then the 10-year yield is up here at 3.5%, which is obviously substantially under the Fed funds rate, almost 100 basis points. So again, even the short term, even the 2 years are saying, hey, we don't believe you. So you can get 4.4% overnight. I mean, you can't, I can't, but banks can. They get 4.4% overnight, or they can buy a 2-year, bond, treasury, and get 4.2%. So what are they going to do? Well, just keep locking it in until things look a little more certain going into the future. So, but more important than anything is we broke out of this descending resistance. We took out the previous high, and this is where 5% takes us to. That previous high back here from 2006, 2007. We already took out 2018. So the Fed funds rate or 2-year or 10-year or whatever you want to look at right now is now back here at levels we have not seen since 2007. And 2007 was obviously, right before a massive crash. So does that have to happen? Not necessarily, but we broke through descending resistance, took out the previous swing high, and now we're threatening, the last previous swing high before that. So if we break up and retest that, and maybe we continue to the upside, maybe we're sitting here a year from now and, we're talking about 6.7% interest rates. Not crazy to think. The same way that when I was saying 5, everybody was like, oh, it's not going to go to 5. That's crazy. We'll never break out. And now here we are. This was the S&P chart. Okay, yeah, so we're done with all this crap. All right. So DXY, still seeing a lot of weakness. It is worth paying attention, though, that it's not uncommon to come down to the 200s, overshoot them initially, but we would expect some kind of pushback up here eventually. Right now, we're working on, 1, 2, 3 drives of bullish divergence. 1, 2, 3. Failure. Did not break to the upside. And now here we are at new lows again. So, again, if the histogram turns back up here, we could be putting in our 4th drive of daily bullish divergence. So it's worth paying attention to. Essentially, we have this little thing going on right now. But until we realistically take out this histogram right here, the previous swing low histogram, we're going to print bullish divergence. If we turn to the upside, because we did already put in a lower low, but obviously the histogram is substantially higher than the previous one. So it's 1, 2, 3, and in the process of forming its 4th, drive of bullish divergence. Now, and you could say whatever you want. Oh, it's because the Fed is manipulating markets and the treasury and the whatever, and the dollar's going to zero. I don't really care about any of that. I'm just saying technically That's what's happening right now. So it's worth paying attention to. Obviously, our target is substantially lower, but markets don't just go up in a straight line. They breathe up, they breathe out. They breathe up, they breathe out. They breathe up, they breathe out. And then when they sell off, they breathe out and then they breathe in. So eventually we're going to see some kind of breathe in back to like 108 or something like that. We're not just going to go straight down here. Now, if we do, it's possible. But, what happened? When did we see a chart moving down just in a straight line? I mean, oil, right? And what do we know about oil? Obviously it's been heavily manipulated by, Joseph or Brandon or whatever we're calling him these days. Tesla. So this is an important one right here. Obviously, I go off of daily closes or whatever time frame I'm trading, which on stock markets is the daily. We're down here at the area that I have defined as my stop loss on this Tesla trade. So we're basically at the point. I didn't pull the trigger on it. I thought about it. We'll see what happens. I'm going to give it one more day. Obviously, it could cost me a few percent, especially since we have like broken down from this descending channel right here. I'm not one to like finagle my stop losses, but as like an arbitrary number breakdown from here, this is like not enough. And we also see blue slope line, the histogram coming back down to retest that. We see 1, 2, potentially 3 drives of bullish divergence. So Tesla's starting to look like the DXY right now. Hard sell signal, not great. At a bunch of support right here. So we'll find out soon. I could be wrong. I mean, maybe there was a time when this was going to burst to the upside, but Elon pissed off too many people from the other side, or too many investors, or too many, sponsors, or, whatever. And now people are just like, oh, I'm selling my Tesla now because Elon Musk is a right-winger that only believes in free speech and, sending rocket ships to terraform Mars. I don't know what these fucking people think, but regardless of what you think, regardless of what other people think, there's potential that, Tesla can go from love to hated. A lot of, Elon Musk was super popular with liberals and then turned into like, now I'm a billionaire and everybody hates me. Now all the crypto people hate me. Now all the left-wing people hate me. Now, for poor Elon, he's lightweight isolating everybody. So it's not crazy to think this thing could go from love to hated and we could start seeing these breakdowns. So target to downside, still 139. Potential target back to the upside of 209 and like that 250 something level. This one could very, very easily be a loser. So Microsoft. So obviously our target was slightly higher here. Went ahead and closed this one out. Took profits on that. So nice little 20-something% move. So, and that's how it works out sometimes. We could be long on Microsoft at the end of a trade while we're essentially trying to long Tesla or potentially even shorting Tesla. So you don't always have to trade in the same direction, for similar or related assets or really for anything. But it does look pretty toppy here at resistance. Again, pretty much everything is literally at support. And if it breaks down, it's just going to melt down, or at resistance. And if it breaks out, it's pretty much going to melt up. So literally like every asset on planet Earth is basically like, just give me a sign and we can just go to the moon or, straight to the magma core of the earthy center. So Apple got the push up here, try to break out of the descending resistance, still can't get above the 200s, still didn't break below this level right here, kind of pinching into this. Still waiting for that next leg down on Apple. When's it going to happen? 2030 or something like that? I mean, who knows? Google still looks pretty trashy right here. Could not get back above the 382. The key is now, though, is when we do finally put in a bottom here and start moving back up, do we put in a higher low? That's what we need to get up to the 200 exponential and simple for that retest of like 111 or like 116. Are we going to do that? I mean, we're still under 100 right now. I'm not going to get overly ambitious on these things, but we did see a hard sell. The stochastics come all the way back down to the bearish control zone and, where are we at in relation? So if these histograms keep going down and price keeps going down the same speed, there's potential we're going to start developing some divergence. So the market is basically telling us, hey, there's a lot of moves going on right now, and a lot of them are potentially unsustainable. So get ready for exhaustion or reversals. Maybe. Meta still looks like trash, filled the gap, and then just hanging out right here. Nobody knows what's going to happen with this thing because it's obviously junk. It's definitely going to go way, way down. It's just a matter of does it go up a little more first. And by definitely, I mean probably. And by probably, I mean it's 50-50. Amazon, very, very weak at the lows. We know the probability of reversing off an 886 is like less than 5%. So to me, seems very obvious. Amazon's going to 81. We're at 91 right now. Could we go back to 102 before then? Sure, we could go up $10 before we go down $10. We go down $10, then up 20. But the truth is, probably not going to be reversing from the 886 based on statistics. Okay, so let's look at our Crypto Connect here. All right, so we're going to go look at Bitcoin first. So obviously, Bitcoin did a big deal. It did a thing. Got on top of the 821, flipped it green, shot up here. Basically got 1 day up and then got a pretty bearish rejection. We could still move up here. I'm not going to get overly bearish now because of this one candle rejection. It doesn't look great, but we come down here and find support around the 8 or 21 moving average, around like 17,000, maybe 17.2, and that looks good. It looks like just another in a series of higher lows, and that's all we care about. So we talked about this exact scenario playing out if we broke down from here, what the retracement looked like and where that would likely go. But as long as we held this level, it would still be important. We talked about if we maintained inside this channel, where we would likely go. We talked about the potential that this was a 1, a 2, a 3. The 4 came down. We knew the 4 could not violate the 236, aka the top of the 1, which it did not. Therefore, we expected one more leg to the upside. We based that on Fibonacci extensions. We based it on internal retracements of our fib from the previous high to the low. We based it on shaking of the magic 8 ball, the position of the moon in relation to the stars, whatever you want to base it on. As long as you got a bunch of confluence, which we did, telling us, hey, we're going to get another leg up here. Obviously, I always am more conservative on my targets, but I think we got up to like the 2.0 or something like that. So if we take from the peak of the 3 right here to the bottom of the 4 right there, we basically made it, overshot the 1.618, made it to the 2.0, and you're like, where? I don't see it. Well, it's not on there. That's why. And then if we just take from the previous one right here, and then look where that lines up, made it to 2.618. So we had the 2.0 of the 4, we had the 2.618 of the 2, we had the 0.5 of the high to low, we had the top of the channel, we had all the other stuff that we just talked about, and sure enough, the corn shall provide. So 4 hour, we can see on shorter time frames, again, very important. We have now officially confirmed into a bull market. Once we got on top of the 200 simple, we know we're range bound between those two. We retested 200 exponential, broke through key support. As soon as we did, we saw a powerful candle, no back test at all, immediately flipped blue on both of the 200s. The 821 shot up to the moon. Very bearish, engulfing candle and hard rejection. Doesn't look great, but let's see. Do we just come back down here again? 17,330 or 16,8? Somewhere around like the 17,200 level or something like that. Lines up with what we see on the daily. We pull back, reset the indicator oscillators, and then keep going, confirm it to a bull market on the 4 hour, and then maybe finally we get a push back up to the previous support, turn resistance at about like 19,000, and then maybe we get up to 20K and retest the 200s. I mean, just look at Bitcoin and how trash it looks. All cryptos, how trash they look in comparison to like literally any stock ever. I shouldn't say that. Any stock that is like good and you want to be invested in right now. Well, most of them are threatening the 200s right now. Bitcoin's still substantially off. So let's just say eventually somebody wants to buy Bitcoin again. No more FUD for like a week or something like that. Or Michael Saylor gets another loan. Whatever. Projects it. We're talking about potential 20 to 25% upside. Does Bitcoin still look like complete trash? Yes, it 100% still looks like complete trash. Still could not even get above the 8 on the weekly. We do see a hard buy coming out of the bearish control zone. Couple green histograms above the red slope line. Starting to see the potential, for this move back up here. And we just talked about it, first it's back to 17, then maybe it's a move to 20, then maybe it's a move to 25. Then after that, we're back testing 35. And the next thing you know, we're at 60. Does that happen? Will it happen? Probably not. I mean, eventually, sure. Maybe like 10 years from now. Ethereum still looks like trash, just hanging out here under the 200s. Did not put in a lower low. That's the most important thing. Obviously, it's at resistance right now. If we lose this level, we retest this previous level, about 1,000, 1,100, something like that. If we lose that level lower, if we break to the upside, probably going to come back up here and retest 1,581. Is there a possibility Ethereum leads crypto out? Sure, it's been the strongest for the longest. It's held up better than everything. So look to Ethereum. Total crypto market cap still looks like total trash. So we basically sold off to, 765 billion, and now we're back at 800. Couldn't get back above the 8, couldn't get back above the 200s, below resistance, trying to build momentum to the upside. So signs of life, at least. Bitcoin dominance, everything included, starting to move to the upside, telling people, hey, we're buying Bitcoin and not all these shit coins or stable coins. And then if we take the stable coins out, we see, we're very close actually to a technical breakout above that 50% level. 50% is an important number, obviously round number. It's also the previous top from these last couple like little swings right here. And we also confirmed the 821 bull cross again. So likely if we push back up, we would backtest the descending, what was support, now turn resistance line at about like 52, 53%. We start building momentum back to the upside. Maybe then we can get above this high, et cetera, et cetera. But what this is telling us, the most important thing this is telling us is that right now, if you compare shitcoins to Bitcoins and you ask people, hey, which one do you want to own? Vote with your money. They're saying we're starting to want more Bitcoin and less shitcoins. Now, does that have to continue? Obviously not. All right, so we talked about the cheese, the chili cheese dog, backtesting the 236, backtesting the bottom of the broadening wedge, and we talked about the potential of, the craziest, swing, ridiculous, 1 or 2 candle, like pop back to the upside. Is it going to happen? No, this thing probably goes to 0. I don't even know what it is. 126% though, with a 7% stop loss. Is it worth a shot? Sure, I don't see why not. Especially if we exit the bearish control zone right here. Especially if we print some bullish divergence right here. So, if you got any hope for cheese, if you want to invest in cheese, and by invest, I mean speculate on something that probably does nothing, and I'm speculating on what it is, this is it. This is the line in the sand. If we break down from this level, we're retesting the lows again. And we know we retested it once, we retested it twice. So we go down there again. Who knows if it holds this time? So it's either this is it, 14 cents, and we hold support and maybe get a nice move to the upside, or we're going to 8 cents. So either one could happen. Would not be surprised in the least bit. If we break down below, 12.39 cents, not interested. Target 30 cents to the upside. Obviously, you want to take some profits at 18 or 23. Or just, again, goes to 0. Obviously, none of this is financial advice. Except for the part about stuff going to 0. That's definitely financial advice. Just assume everything's going to 0 and then go from there. Solana's still trash. Nobody cares. Chainlink looking pretty fucking weak right here. Real weak. Couldn't get back on top of the 200s. Couldn't retest the 200 exponential. Like, pennies off the bottom here. Avalanche, just complete trash. I mean, look at this thing. Barely off the bottoms. Complete Trash. Polkadot at the lows. I mean, this is the lowest low we've ever been at. If you're like, oh, Polkadot, how's that look? And you're like, well, I mean, it's not, we're not at the wick. If we wick down here, that's a little lower. Well, this is the lowest close we've ever had, was at this level. So get ready for new lows on Polkadot. 13 cents away. And again, we're currently in the process. You're like, what's the absolute worst day in Polkadot's history going back to December 2020? What's the worst fucking day in Polkadot's life? It's today. Congratulations. You have the worst day of your life today. Excluding those couple weeks. Based on price. I mean, Polkadot as like, an entity might be doing well, have like good spirits, and, moving forward. But like price-wise, worst day of its life recently. Matic is next. Still holding strong up here above the 200 simple, below the 200 exponential. I mean, I'm not going to lie. The more time we spend at the 200 exponential, more likely this thing breaks to the upside. This is like probably one of the best looking cryptos. Basically range bound between the 382 and the 0.5. So we'll see. If this thing gets another push up here, it's probably going to backtest the 618 one more time. Probably going to backtest the breakdown from this ascending support. I don't love this support, but there's quite a few touches on the way up right here. So once we lost it, it's not crazy to think we're going to backtest it. So even if you're not going to get greedy and go for the whole move, it's still like 56% just to come up here, double top, and then go straight to 0. So I wouldn't write this one off just yet. There's definitely some potential opportunities for some bullish trades. We don't have to look just at the bearish stuff. XRP is next. I heard, rumor has it, this is going to actually be the next world reserve currency, and the SEC is currently preparing an apology because obviously it's not a security. Now, I don't know if that's true. It came from a cult member of the XRP army. So, you know, take that with a grain of salt. But the chart looks like total trash, complete garbage. And if we lose the 618 right here, it's probably going to go straight to zero. Oh, you knew I was going to say zero, but I'm not finished. 0.26, 26 cents. Got you, didn't I? So 25.4 cents will be the next target on XRP. God, these cryptos look so fucking bad. Cardano, terrible. The same thing that we were talking about earlier about the worst day of, you know, this asset's life. This is it. And, you know, maybe not of its life, because at one point in time, it was valued at less than this on the way up. On the way up, it was valued less than this. But now it's complete trash. Probably headed to a 0.5. So you got 23 cents. God, all this garbage down like 90 something percent. Complete garbage. Still has a full cult following. I guess that doesn't say much though, because people like join cults, drink poison Kool-Aid, watch people die around them, still continue to be in cult, drink said poison Kool-Aid, and then die. So I guess there's just never a line where it's like, you know what, I'm done with this. You just completely get wrecked until you're dead. BNB. All right, so this is maybe the most important crypto in existence right now. Not because of its functionality or anything like that, but because of the implications of, you know, what could potentially happen here. This is it. This is it. We're not at the line in the sand. I know I use that way too much, but that's it. The low down here is the line in the sand for like, oh shit. This right here, though, is a long support that we had. You know, this was the initial push down in May, and then test, trying to go higher. Finally breaks down, comes back up, lower high. Bear market confirmed. This thing looks ready to drop. So get ready. If you're holding BNB coin right now to save on fees, get ready to lose 25% of your principal so that you can save on fees. And as long as you're okay with that, if you're like, oh, I trade so much that it's worth it, I could lose the 25% and then not pay the fees on my trillions of dollars. Sure, okay, fine. All right. But if you're not in that situation, maybe consider not losing 25% of your principal to save on fees. And that's just, you know, best case scenario. Obviously, did a full breakdown on BNB. Go ahead and check that one out in the static videos. Berkshire Hathaway, still hanging out above the 200s. We talked about this area. This is very important. If you want to be long Berkshire Hathaway for a test of the upside, that's great. But if we take out this 0.5 and start losing the 200s, you know, don't overstay your welcome. Looks very weak right now. Lost the slope line. It's still blue, but now we back test up and get rejected. I mean, everything could go either way at this point in time. I have like very little confidence in the direction of almost anything right now. As crazy as that sounds, I know. I shake the 8-ball and it's either a middle finger or a question mark every time. And that's obviously where I get all my skills. So gold at resistance, holding on for now, still looks okay. Printing bearish divergence. You know, I mean, this is it. If gold just goes sideways for long enough right now, I'll be bullish soon. So we'll be back in a bull market. Silver is crossing the 200 exponential above the 200 simple. 200 simple is still red for now. Hit our targets. Overshot them a bit. We have talked about getting up here to 25. We'll see if that actually happens. But again, we still just have descending resistance going back to our 2011 peak. You know, that's our high. That's our resistance. Every time we try to get above it, we get wrecked. And it's consistently just lower highs and lower lows. So if we can get above 25, let's go to 27. If we get to 27, let's go to 30. We get above 30, let's go to 50. We get above 50, let's go to 190. Or we're just getting ready for another lower high and lower low. So we'll see. We shall see. Silver Juniors had a nice move up, stalling at the 200s. GSG, we got a little touch, literally a touch of the box. A new lower low, and then the back test. So if this area acts as resistance, I would expect a harsh rejection, and then that continuation to $18. Continuation to $18. Sorry, my words sometimes don't work. But we are now officially confirming into a bear market right here. So again, a push up right here likely is met with selling, as we have basically, you know, confirmed into a bear market, and we would be pushing back up into what was support, now acting as resistance. LNG, that liquefied natural gas, that fatty natty, that Cheniere energy, broke down from the ascending wedge with multiple drives of divergence here, came back up, lower high, breakdown, back test. Again, I would expect this to come down to 149 and hit our target. And this is that interesting point I make about when things are going up, they don't go up in a straight line. They breathe in, they breathe out. When they're going down, they don't go down in a straight line. They breathe in, they breathe out. So when we see a couple of these charts like the DXY or oil or, you know, some of the other commodities, we know that something is happening that's causing these things. And you're like, well, that's what it is. It's the manipulation. That's what I'm saying. Sure, whatever. Okay, anytime you're a player in a market and there's another big player and they're doing shit that you don't want them to do, they're technically manipulating the market. When you buy stuff as a player that matters none at all, whether you're trading a $100 account or $1 million account or, you know, $1 billion account, if you're trading in the wrong asset, you're manipulating that asset. I mean, really, always you are. But, you know, if you're manipulating your asset with like, you know, $1,000 trade, it's not going to actually manipulate anything. If you're doing it with $1 million or $1 billion or whatever, sure, it shows up more as manipulation. But the truth is, it's really just players doing the opposite or doing the same as you, buying or selling. So we know the U.S. government has been manipulating oil by selling off a bunch of extra supply. Therefore, there was more sellers than buyers. Therefore, price went down. And it went down in a very measured, very methodical manner. And people go, that's manipulation. Well, sure, because we see it in, you know, plain view what's happening. And 100% OPEC is pissed because they're like, you're manipulating the oil prices with paper markets and strategic petroleum reserves. Sure, okay, fine. We're selling the shit that we have into the open market, affecting the price. Okay, that's manipulation. So yes, every single asset since the beginning of time has been manipulated. So anybody that's saying that's manipulation is true. But also, if everything's manipulation, then nothing's manipulation. So it's the two extremes. So Mosaic, fertilizer, threatening the lows, confirming into the bear market. We're seeing this across a bunch of different assets. The strong players, energy, fertilizer, all these ones that were supposed to go to the moon are now actually like confirming into bear markets, breaking down, taking out the recent lows, likely to retest the previous lows. And at that point in time, you know, if we take out that low, then we start looking at, you know, our targets down here, the blue box area. You guys know what the blue box means. It means can Critty get a nut? Target's getting hit. You know, that's when we're buying. Wait for the market to come to us. You know, sometimes it doesn't, and that sucks, and it runs away. But, you know, there's always, if there's one thing Jim Cramer ever said that's true or correct or smart or intelligent, it's that there's always a bull market somewhere. It's so fucking true. There's always a bull market somewhere. You might not see it because you're in the crypto cult. You might not see it because you don't buy stocks or you don't buy Beanie Babies or tulips or whatever, but there's always a bull market somewhere. Except for right now. Right now, I can't find the bull market to save my life. But every other time, though. So CCJ, Cameco. So we did a deep dive on this. I'm not even going to mess with the uranium stocks. Tilray playing out exactly like we discussed. Obviously, we get the back test. We take the profits. There was potential for the massive breakout. But, you know, obviously, what do we expect? The same thing that happens every time. We come up to resistance, the 200s, the descending resistance line. You know, and then what happens? We get a nice move to the upside, 31 to 38%, depending when you bought in. If you stayed in the trade longer than I did, you know, you were having a full-on party. I mean, you could have stayed in and made almost double what I made. Well, 33%. That's not, come on, you're not that good. Or I'm not that bad. I mean, that's the real as it gets right there. But also, we just gave it all back, took out the low right here. So, you know, not good. We lost all the good stuff we did right here, just got reversed. And once we broke down from, you know, our two support lines, you know, there's nothing really here now. So where do we go next? Probably back down to $3. And if you got greedy and didn't take profits, you just literally rode up 30% and then gave it all back. And now you're break even. And now you start saying, oh man, I don't want to turn what was or should have been a winner into a loser. So you're like, oh, it's going to go back to the upside. I don't want to sell now. I mean, better make up your mind, obviously, you know, because you freeze in these markets, you end up getting hit by a freight train. So UNH, again, just banging its head on that resistance, ready to just go parabolic. Or not. Or maybe it comes back down here and melts to the downside. I don't know. There's a big player in the Dow Jones. So very, very important. By far the biggest. So if the Dow looks strong and UNH looks strong, you know, it makes sense. And I mean, this is literally carrying the entire Dow Jones on its back. I mean, a couple of the other Dow stocks look good. But let's be real. You know, this thing is literally knocking on all-time highs The Dow looks okay right now, but it's not at all-time highs. I mean, this thing is crushing. Crush. HD, Home Depot, the Dirty D, or the double. So we talk about the breakout. It gapped up. It sold back off. Closed the gap. This is it. If support holds right here, we get the party. If it doesn't, we get stopped out and go back down to the lows. So again, did a full breakdown on these. You guys sensing a pattern at all? Like slowly just making our way through the regular run up with these static video breakdowns. Goldman Sachs, and if you enjoy those, appreciate those, make sure to actually like them and leave a comment, because it really does help with exposure and the algorithm. GS, the Goldman's dirty nut sack, holding right now at the top of the one. Again, we talked about this. If it does come down here to what you would expect, a decent retracement, back test at 200 exponential and simple, we violate the potential of, this to be a fourth wave and to get a 5-wave actual structure here. So we can't technically go down any lower. That's what the most likely scenario is, that we come down to the 0.5 in between 200 exponential and simple and then continue to the upside. But if we actually break lower than we did, we can't have a 5-wave structure. But the truth is, we don't often get a big give back like this, almost like the whole entire thing, and then afterwards get a super shallow retrace. It's not common. I mean, this reversed off the 886, so I say all the time it's less than 5% chance. Well, look, it happened. So, but this kind of reversing off the 236, so it's the minimum required retracement, but this thing's going to look like straight ugly if it just starts ripping to the upside again right now. But it could happen. Cat hanging on at these levels. If we lose this support right here, we know backtest or 200 exponential and simple probably in the cards. I mean, if we hang out here long enough, though, shit, might as well just go to all-time highs. So go ahead and do it. Do it. Again, Cat, big player. And obviously, this whole run-up is the top 10 names in the Dow Jones, which is why we're looking at them, because the Dow is the only good index on planet Earth right now. So we're looking at the top 10 reasons why it does or doesn't look good. Speaking of why it doesn't look good, short term, McDonald's, part of the reason it doesn't look good. Long term, part of the reason it definitely looks good. I mean, this thing just, prints money. But it does look like it's coming back down here at 247. After that, though, I mean, statistically speaking, we're above the 200s, by the 200s, and then we just go to a new all-time high. Congratulations. Now you're a pro trader. So Amgen finally got the breakdown, partially based on the news for the acquisition. Kind of just expected that. We gapped up here, we held, we put in a clear descending triangle, we break down from the triangle, now we're testing support. This is a very, very strong resistance in red. So I would expect that to act as a very, very strong support. We're also coming up on the 200 exponential and simple. If that holds when we backtest it, that's buying opportunity of a lifetime for that measure move breakout to the upside. So, and by lifetime, I mean of the week. I don't mean to over exaggerate, but we're talking about a 27% for that measure move roughly. If we start breaking down below this massive cluster of support and the 200s, we don't want to be in that anymore. If we get down here, which we don't know if we will, if the market comes to us like a good little bitch, 4% stop loss, 27% upside, 6.6 to 1 risk reward ratio. And if you don't like doing it that way, we can look at it and say, okay, let's just go from this macro wick high right here, and then we'll just project a upside fib to the most recent low, and then we can just look for the 1 point, obviously tag the 1.236 already, 1.5's up here, 1.618 slightly higher. So realistically, that should probably be our target between the 1.5 and 1.618. So yeah, it looks pretty juicy. And again, definitely has something to do with the old Dow Jones. Microsoft, we already talked about. I might remove it from Magma won't make sense without Microsoft, so it's got to stay in both places. Visa, trying to get that breakout, trying so hard to get that breakout right here. Pushed up, looked like it was going to do it, tagged the 618, slightly broke out, and then just sold off all day. So this is it. Again, we're above the 200 exponential and simple. We're breaking a descending resistance, or trying to. If this thing breaks out to the upside, not crazy to think we're coming up to the 786 or probably new all-time highs. If not, though, I mean, and realistically, it's probably more like just a channel at this point in time. It's pretty clean and clear. That's our channel. We're trying to break out of the channel. It looks okay right now. This thing could be getting ready to surge. So, anybody that's like, no, Dow Jones is trash, we're in a bear market, don't believe this bear market rally. Sure, it was a bear market rally, and it might still be a bear market rally, or it might be a rally that turns into the beginning of a bull market. And that's every bear market rally either does one of two things. It fails and the bear market continues, or it eventually, breaks out and then the bull market starts again. So don't let anybody talk you into this being a bull market or a bear market or just a bear market rally or whatever. Figure out exactly how you're going to determine for yourself. And then, obviously make sure you're taking into account risk reward, probability of success, all that good stuff as well. Position sizing, very important as well. If you go all in on a trade and you're wrong, you're fucked forever. If you use correct position sizing, you could be wrong plenty as long as you're right more than you're wrong, and you take high probability of success trades or high risk reward trades or a combination of all three of those things. And then, give yourself the best possible chance to win, Honeywell looking pretty good here. Nice strong push up. Try to move back to the upside. Looking a little bit toppy, but realistically, what are we talking about? That W breakout, the descending resistance breakout, the same thing. So, it seems likely if this thing is under pressure, which, it is. We know it is. It seems likely that we would come back down to that, what was resistance, act as support level. So we tried a little bit, and then we get that little gap up and then sell off. If we see this continued weakness, not crazy to think we're at 200. The 200 exponentials meet us there, and we get 200, 200, 200, boom, to the moon. Something like, right around that area. We'll use the squiggles. I hate this tool. I wish after you used it, it just went away. Instead, it just stays active forever to use a different tool. So, TradingView, get your shit together. TRV, Travelers Companies, still holding above the previous high. So as long as it holds up here, it looks good. Bearish divergence, clearly. The the blue slope line is still surging to the upside. It looks like this thing wants to go to new highs, print one more drive of bearish divergence, and then melt down. Maybe that doesn't happen. Maybe it just melts down to 172. It's only a 10% drop though, and then honestly, it's one of the better stocks in what is arguably the best index. And you're like, that's not the best index. There's some crazy index that you've never heard of that only invests in one specific thing that's doing well. I'm like, okay, fine. Big index that people have heard of. Deer, again, got that gap. Looking to reload on the gap or on the pullback or on something. It's just hanging out at the highs. So I don't know. We're seeing some weakness on these charts. So at the highs. And then UUP. This was it. We finally got the push down to the 200 exponential. It looked like we were going to get that push up, and then here we are at new lows, lining up for a potential another drive of bullish divergence. So we'll see. Again, this is, basically straight down. Not literally straight down, but, pretty orderly march down. So eventually, and it might not be for a long, long time, but eventually you would think, I don't know what the hell is going on here. There would be some kind of pop. Something I would expect. Even if this is the top and we never go higher than this ever again, for the rest of existence, and the dollar just goes to zero, I would at least expect some kind of pop off of the 200 exponential and simple, off of a, descending channel support, off of bullish divergence, whatever. And this is likely, if and when it happens, going to put pressure on the markets. And, don't be fooled at all. There's one reason and one reason only these markets are strong right now, and it's because the dollar is weak. Because even when the TNX, the treasury yields were strong, the stock market was strong. And when they were weak, the stock market was strong. The only thing that matters right now for all these risk-on assets, the one thing that matters is the DXY as we look at the UUP chart. And then Lulu. So we got the gap down to support. Just watch a long video on this. I did a full breakdown on the sweatpants company. All right, we did it. It only took us 2 tries. Congratulations. Thank you all for sticking with me. Sorry about the muted thing. at the beginning there. All right. Just jumping in the chat here. So yeah, I guess that's it. We'll go ahead and wrap it up there then. Appreciate everybody tuning in today. Obviously, we got exactly what we expected from the Fed meeting. And now, the Fed finally got on the bandwagon with the 5%. So congratulations, guys. Welcome to the party. That's the best part about being us is we're always waiting when everybody else gets there because we always can get ahead of these trends. We do all this technical analysis. Everybody else is looking at fundamentals and news and listening to talking heads. We just put in the work on our own, come up with, and don't get me wrong, other people's resources benefit us as well, but we put in a lot of our own work, make a lot of our own theses, and then here we come. And, we've been very fortunate over the last couple of years to really be ahead of all these markets and, be very profitable off of them. So we'll keep it up going into the future. And, obviously 2022 coming to a wrap. The real question is now, what's 2023 going to look like? And somewhere out there is an asset that's going to put in, positive gains for the year or go to new all-time highs in 2023. And you know what? It's our job to figure it out and make money off of it. So let's do that. So keep putting in the work. Obviously, you guys are all here in the middle of a bear market when not a lot of other people are paying attention. So you're the ones who are going to succeed. The real trades are made in the bear market. The real profit is made not from when you sell, but from when you buy. So just remember that. And obviously, the most important thing you could possibly remember is this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. If you listen to anything I'm saying and take it seriously or try to make money off of it or assume that any of this is financial advice, you will end up living in a van down by the river. And not a good van. One without wheels. And you'll be eating cans of tuna and bugs. Oh wait, that might be World Economic Forum. I can't remember. But anyway, we'll wrap it up there. Hope you have a great night. I appreciate y'all tuning in. And I'll see you guys in the group. Keep your eye out for those static videos. Make sure if you do want those to keep coming, interact with them because that really helps out. So I would really appreciate it if you take the time to click the button or, put anything in the comment, including emojis. But that's it for today. So that is our Wednesday midweek market update. We had the FOMC meeting, the rate hike, all that good stuff, inflation data, blah, 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 blah. Going to go and wrap it up there. Everybody have a great night. I'll see you guys on the Friday morning stream. I am planning on doing the Friday morning stream, but we'll see. Maybe I'll drop out a bunch of static videos instead. We'll see. But yeah, that's it. Crypto Trend Trader, and I'm out of here. Peace.